You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it's time to get funky. It's time to get fun. It's time to talk some futures options with Twifo. My name is Mark Longo from theoptionsinsider.com, the brand new optionsinsider.com. Hope you guys have had a chance to check out the brand spanking new addition to the family out there. You know, you have to upgrade the sites every few years, and it was time for us. So we've added a whole bunch of new stuff. Hope you guys check it out. Make sure, whenever we add one thing, 10 things always break behind the scenes, so if something's not working, let us know. We're figuring out all the bugs for ourselves, but hopefully you guys have found everything you like and everything you see up there. You like the new format, like the new display for the shows, the articles, all that good stuff. Let us know if you have something else. And there's more features coming online as we speak. We're still tweaking it, so stay tuned for good stuff. TheOptionsInsider.com, the place to go for all that goodness. It's not just shows here. It's a lot of shows, but it's not just shows. And if you want to just get shows, you can always all get them all there as well, including our live stuff going to be integrated better into the website going forward. So you can see when we're live, what we're doing, how to listen to it, all that fun stuff. It's really cool. I've been working on it for a while. I've been promising it since the beginning of the year, so it's finally here. Kick the tires and light the fires. Let us know what you think. All right, let's get into it. It's one of those weeks where everybody's hither and yon. I don't even know what time zone Sean is in over there from FTSE Russell, but he's not in this one. Usually, if he's here, he's sitting next to me, holding down the court with some delicious burgers. Our buddy Nick over there, I don't know where he is either in terms of time zones. Everyone's hither and yon, traveling, moving and shaking. A lot of things lighting it up out here. So I'm holding down the Twifo hot seat by myself. I am in the CME Group hot seat this week, and it's very uncomfortable. Very Iron Throne-ish. I almost said a spoiler there, but I won't. Instead, let's keep on rolling. You guys keep pestering me about what I think about Game of Thrones. Maybe we'll get to that a little bit later. But let's get into the fun stuff right now in terms of what's lighting it up in the world of futures. Indeed, what's lighting it up in the world of derivatives. We give a lot of insight into what OCC does every month, but we don't get a chance to do that as often on the futures options side of the fence. And things have been active of late over there. On the 14th, so just a couple days ago, CME announcing they hit a new OI record, 138.2 million contracts. Of course, that's across all of their complexes out there. But still, that's a ton of open interest. It just passes by the previous record of 138 and about a half million contracts that was set on March 15th of last year. So it's been over a year since a new OI record has come into fruition. So it's been a while. It might surprise people considering how active 2018 was, that we didn't set more records that year, but we did not. And it didn't come either in the tumult of the February 5th and that near meltdown. It was later on, March 15th. So interesting timing from that perspective. Overall, OI grown about 20% since just the end of last year. So that's the end of 2018. So that's a big pop with the one seeing the biggest gains out here in terms of overall complexes. Rates. Go figure. Rates lighting it up these days. Not surprising. 26% OI increase there. Ags up 23%. So the trade war not damping down the volume out there. Equities up 17%. Metals 15%. And FX bringing up the rear with a paltry 6%. Let's look at some individual products, see what's lighting it up out there in terms of single-day records. Also on May 14th, obviously, an active day out there. The long-term Treasury futures reached a new OI record of about $1.25 billion, million. That would be a lot of billion. $1.25 million contracts out there. The Ultra 10-year hitting about 765,000 contracts OI. Good old buddies, Lean Hogs, a.k.a. Hog Love, also lighting it up. A pretty strong OI, 428,000 contracts for Lean Hog option. Maybe I'll do some Hog Love on the show today. And Brent Crude Oil futures OI record, 234,000 contracts. Speaking of crude oil, let's get into the sticky stuff, the Texas tea. You guys can follow along, as always, cmegroup.com/Twifo. That's where you get the kind of basic free version if you want to upgrade to the high-tier stuff. Quickstrike.net, Bantix.com, other places to go there. Once you're logged in, people ask us, how do I see what you guys see? Head on over to the top tab there. You see Quick Reports. Click on that. You'll see a bunch of different reports in there, including the Twifo report. Click on that, and then you'll see exactly what we're seeing here on the program. If you did that right now, for WTI, you would see that it has been a bit of a boost here. For the week, we're up nearly 2%, 62, almost 63 out there in WTI right now. It's interesting kind of seeing what's going on, what's driving price action out there. Because, of course, we had a gain in crude inventories. The market kind of said, I don't really care about that. Also, Middle East is kind of where every time there's tensions in the Middle East and data ends in Y, guess what? There's probably tensions in the Middle East, but we're ratcheting it up now with our saber rattling back and forth with Iran. That, of course, causing a little bit of tension in the Middle East. That, of course, giving a little bit of lift to what's going on out there. What's going on out there in the crude marketplace. So that's been, we're ferrying staff out of our embassy in Baghdad, all of our concerns there as well. So all of that kind of ratcheting up concerns there a little bit. Of course, the downside was the continued exacerbated trade war between us and China. That, of course, is the demand side of the equation. But people are seeing maybe supply side outweighing the demand side at this point with potential tensions in the Middle East, what's going on in Venezuela and others. There's still some lingering uncertainty over OPEC, how much their supply they're willing to put in to offset some of these production losses. All of that making supply the chief concern now rather than demand. So that's actually trumping what's going on, pun intended, with the trade war and China. So let's see what all this has wrought here in the WTI options space. We're seeing vol coming off yet again, off pretty substantially, off nearly 2 handles, pretty much across the board here in the term structure of the CME WTI months here. There we go. That's a little better. All right, it's easier to see now. Perfect. Love the old dark mode, listeners. But off multiple handles here in a lot of the months here. Let's see where the action was out here from an overall volume perspective. By the way, OI, not a huge week on OI. We were just talking OI earlier, up about 3% this week. That's kind of about an average week out here. Let's see where the volume was concentrated. If you want to say a little bit farther out, maybe in June or something like that, no. The answer was actually, or SEP. You're thinking maybe SEP a little bit farther out, or even, it's not going to be in the weeklies. And I kind of misled you there earlier. Actually, it looks like it was in June. That's a large print there. We saw the 62, almost 63 is where we're coming into showtime here. It's the 60 puts yet again. That even money type product keeps lighting it up. 60 puts. I think these went off the tape now, so I can't even get an exact. It looks like they have now gone the way of the dodo. They were expiring momentarily, and 27,000 of those front June puts there, lighting it up. And I can't recall that because they have gone the way of the dodo. But 27,300 over the top of the week. That was the big print out here by a country mile. And then we get on out to good old July, 65 calls. So it wasn't all puts all the time. The July calls were also lighting it up to the tune of far less, 12,000 of those lighting up. Looks like pretty much evenly throughout the week, 3,500 on Wednesday, about 3,000 on Tuesday, actually 4,500 on Monday. So today was the laggard, only about 1,900. So it wasn't all downside, listeners. There was some upside love there as well. 65 calls taking it out there in July. Let's look here at the skew really quickly. I can't look at the skew in an expired contract because it's expired A and B. It's all crazy gamma. So let's go out here back to July and check on it for ourselves. Interesting what's going on out here. A week ago we saw the puts were where the action was. The puts were 5.2% rich to the at the money. Coming into this week, the puts are more bid. 11.2% rich to the at the money. Also seeing the calls getting cheaper. The calls were about 2.1% cheap to the at the money. Now this week coming in, they're 6.1% cheap to the at the money. So the calls have come in. The puts have come up. That's kind of what you expect to see as you're sliding up that skew curve there. You're going to see a little bit of a rotation around the at the money axis there. And that's pretty much what we saw. So going to the upside, that explains also why the vol's coming in as heavily as it is, because the calls are cheap and getting cheaper. So maybe if you are an upside fan, maybe this is an interesting opportunity for some cheap calls. And if you're not, if you're looking to hedge, unfortunately, got a little bit pricier out there. Maybe you want to look at some verticals and some spreads lighting it up out there as well. So that's our old friend, the Texas T. Let's keep on rolling. Again, if you want to switch products, listeners, just go to that drop down there. And you're going to follow along with me. We're going to go to equities. In particular, let's start in the land of Russell 2000. If you've been watching the equity space, excuse me, or listening to any of our shows over the past week, the option block volatility views, etc., and so on and so forth, you know that equity vol kind of came and then it kind of went. Trade war premium, I think to call it fleeting would be charitable. It came and it went, and at least so far, it's not coming back. Coming into showtime, at least, we're seeing the VIX about 5 handles lower than where it was this time last week. We were north of the 20 handle. Now we're at about a 15 handle. We're seeing the same thing in RVX. That was about a 24. Now we're at about an 18. So that's off about 6 handles. We're seeing that spread actually widening a little bit. VIX coming off, actual RVX coming off a little bit more than VIX, I should say, at this point. So about 3.3 handles. So widened out nearly a full handle from where it was this time last week. And before we get into what's lighting it up, we had Tim on last week, Tim McCourt from the CME Equity Complex. He was talking about those micros, and what's lighting it up are the freaking micros. Those things are clearly, you guys like yourself some micro. I guess you've been waiting for, the micro S&P, the micro NASDAQ, the micro Russell to really sink your teeth into them, because the futures are just blowing the doors off. CME has admitted this is their most popular new product I think that they've ever launched. 2.6 million contracts traded just in the first 5 days. Remember, we were well less than that, well shy of that on our last show. They had about 300,000 contracts coming into the first couple of days. Now we're at 2.6 million. So clearly, these things are resonating with you. The next step is going to have to be the options. I remember I put this to Tim last week, that if the perhaps unanticipated degree of success of these products will accelerate that adoption of the options. Yeah, he kind of hedged a little bit on it, but I think that's probably where we're going to see. These things are lighting it up. Options on that makes a heck of a lot of sense. Of course, they are fungible with the big products as well. You have to kind of just know your ratios out there. These are 1/10 size contracts, and then you'll be good to go. In terms of what's lighting it up out here, and let's look at the Russell 2000 options. What the big action out here? We're off about 14, nearly 15 handles, so right around 1% here. Net on the week, we're at about 1564 right now in the Russell 2000, and looks like longer-term downside, SEP 1400 puts is what's leading the dance out here this week, trading a couple of times on Monday and on Wednesday. All of that actually closing. So it looks like someone perhaps deciding against keeping some of that protection on. Maybe they were trying to harvest a little bit of the old risk premium with some out-of-the-money puts, deciding discretion is the better part of valor. Either way, they're closing out the 1400 puts, and that was the big trade of the week out here. Let's go out to the E-mini S&P, see if that is following along as well, and what's going on out here in E-mini land. Remember, listeners, I like to choose the select all when I'm doing this. Nick gets mad at me for it all the time whenever I do that. He says it's too much. It is too much sometimes. It can be overwhelming amount of data. But again, I'm doing a show. I need to see all of it at a glance, and that's what the select all allows you to do. But I can certainly agree with people out there who think it's too much of a good thing. All right, and let's go out here in the E-mini. We're at about 2887 right here, so kind of unched on the week. So a little bit of tale of two cities out here. Small caps taking on the chin. The E-mini actually looking pretty decent right now on the week. And we're at about 2887. It is the 2600 puts. So downside out here in, where are we? Out here in June, that is leading the dance by a small margin. At the front week, expiring in a day, 27.5 puts are only about 1,000 contracts behind it. But we saw 33,000, almost 34,000 of these June 2600 puts leading the dance. And they were trading pretty much all week. 10,000 on Monday. 16, almost 17,000 on Tuesday, and a little lighter, 4,000 on Wednesday, only 3,000 today. And the lion's share that actually closing yet again. So closing out of the money puts here seems to be the narrative, the trend du jour, at least out here in the equity options. I won't spend too much time breaking down the skew because it doesn't change as much out here in the equity space as we see it doing in some of the commodities and other products. And vol, as I mentioned already, kind of has been annihilated, but still not nowhere near off as far as it has been over the course of, let's say, what we saw, the upside that we saw a week ago. We're certainly lower than that. All right, let's keep on rolling out of here in the equities. Let's see, where do we want to land next? Let's land, why not? Let's go to metals. Nick's not here. He likes himself some gold. Let's talk some gold. We talked copper last week and how copper is a surprising benefactor of all this trade war concern. You think, Chinese demand is the big driver of action out there in copper when there's not as much of it. Maybe you might see a little bit of tailing off of that volume, but that's not exactly, we've seen the opposite. We talked about record volumes out there in copper, and let's see what we have going on in gold this week. We flirted ever so briefly with that 1,300 level, and now we're back to 1,286 out here, at least on the week. People have been watching, waiting, hoping, can we break that 1,300 level? Can we rally north of it? That kind of seems where a lot of the mental action and mind share is centered around gold these days. This week, not so much. Kind of only slightly unched net on the week, off about a handle. Again, 1,286 or so. out here. In gold, the vol, also a bit of a mixed bag, nearer portion of the curve, kind of a coming off longer-term portion of the curve. Slightly, and I say ever so slightly bid, not a ton of action out there. Let's see where the big action for the week was. It was in July. July upside, July 1340s, leading the dance, 6,400 of those. Bringing the pain here this week. Pretty even throughout the week, about 3,000, 2,700 or so on Monday, then about 1,600 on Tuesday, 1,300 on Wednesday. Light today, only 600. So heavier towards the beginning of the week and then kind of even throughout the rest of the week. A lot of that opening, over half of that opening. So opening upside here in July in gold, which is kind of interesting. The bugs out there in force. Also worth noting, looks like at least on Monday there was similar sized paper in the 1380s and the 1380s, both doing a little bit more than 2,000, about 2,500 and 2,300 respectively. So maybe a bit of a vertical. I would think the 1340, 1380 lines up a little bit better than whatever that 1330 is. Unless maybe they did a 1330, 1340 with that 1380 kicker. If they did that, though, it probably would be on a ratio for the latter, and we're not seeing that. So we see similar paper on Monday for those strikes. Haven't had a chance to dig into the blocks to see or if anything was put up as a funky spread. Looks like it may be a 40-80 vertical, which would make a little more sense than just the 40s outright there. All right, let's see what's going on. Gold's always one of the more interesting ones from a skew perspective, listeners, because it changes, it moves, it evolves from week to week. And let's see what kind of evolution. Now that I say that, I, of course, have jinxed myself because we didn't see a huge amount of evolution out here in the gold skew. I'm looking out here in July. That was the most active month this week. The puts, at least, kind of remained about where they were, about right around. They were about 4% cheaped at the money. Now they're a little bit more bid, about 3.7% cheaped at the money, but still not a huge move. The calls did move, though. The calls are where the action is right now. In gold, as you might imagine, by the 1340s leading the dance this week, you're going to see some changes in the July skew as a result. And that's exactly what we saw. They were about 7.5% rich to the at-the-money, now nearly 9%, 8.7% rich. So calls catching a bid, maybe that's a sign. Maybe. I use that term cautiously. Maybe that's a sign that the warm is turning. Maybe it just reflects that little bit of paper we saw there. Either way, calls getting a little bit more love. That's why the metals are kind of fun, is because every week's a different story out there. And it makes it a little bit more exciting to keep an eye on some of these things versus, how much are the puts bid in the equities versus the calls kind of thing. It's not usually a huge area of a lot of action, a lot of movement, a lot of fun out there. We put out to you guys before the show too. What did you want us to talk about on the show? We've got a little bit of love here for some ags. So I'm just going to go out here. Let's go to the beans. Haven't checked in on our friends the beans in a little bit and see what's lighting it up in the land of the most magical of fruit. Here we go. All right, soybeans again. Click on that drop down. Click on ags. Click on soybeans. You could follow along with the home team here, listeners. A good week for beans from an OI perspective, up 6%. That's pretty healthy. For the beans, we're at 840.75 coming into showtime, so that 840 strike up nearly 4%, 31.5 handles. That's a good run in the beans here this week. So maybe looks like rumors of lessening of the tensions between us and China. Remember, the beans are kind of ground zero for the trade war. Whenever you look at the impact of the trade war, you got to start with the beans. China was their biggest customer. They went to zero net imports for a while there from U.S. beans as a result of this trade war. So any impasse, certainly, any sort of progress, certainly going to be seen as a welcome sign. That seems to be the case. 30 handle rally this week out here. And the beans, vol also up. Not surprising. People always think because they're biased because of equities, downside equates to vol. But movement in any direction is vol at the end of the day. Listen, it's not all about downside. So you're up 30 handles, nearly 4%. Yeah, that's vol. And it's coming into all of the months. Not a huge spike in vol, but a decent lift across the board. Seems like the biggest spike coming out here. Looks like where are we here? Looks like maybe June. Yeah, June getting the biggest lift here. And looks like middle portion of the curve is kind of where we're seeing the decent amount. We got some going away, this week, but that doesn't count as vol, at least not to me. All right, let's go out here a little bit farther out here to see what lit up the tape in terms of action this week. And I said we were at an 840 on the beans there for that front month contract, and it was 860 calls going out next week pretty much. That are where the action, I take that back actually a little bit farther out. This is why you have to hit select all, listeners. You could see all of it. It's kind of a tie, close dance here, but the winner is going to be actually the 800 puts, those par puts in July. That's an active strike pretty much in July, and in, where are we here? In November as well. So July and November, 800 puts. Very active. Just start with July. Almost 21,000 of those are going up this week for our number one with a bullet. Pretty active all week. 6,000 on Monday, almost 6,000 on Tuesday, over 6,000 on Wednesday, and about 3,000 today. So, and actually a lot of that closing. So maybe a similar narrative to what we saw in the equities of maybe closing out a little bit of near-term downside protection here now that we've rallied through that. Maybe concerns are alleviated that we're going to break that. Maybe they had some line in the sand. They had written in some puts at that strike. Either way, deciding to get the heck out of Dodge. That's the biggest trade by far. But then we go out to the November 800 puts. They are a fairly close number two with 15,000 and change going out there as well. And the big trade coming on Monday, nearly 6,000, and then Wednesday with about 5,000 going up. Net on the week also closing, only a little bit less though, only about 1,700 of that closing. So back and forth on the 800 put strike in both months, biased towards the closing. Interesting. That's kind of, now that we've been watching some of these products for a little bit, you get to have a little bit more of a sense of their flow, and it does seem like a lot of them do like to aggregate around those even money levels. We see it with the 60 handle in WTI. We see it with 1,300 in crude. We see it now with 800 and 900, those levels in the soybeans. That works for a lot of asset classes, but a couple of these commodities tend to do it even more aggressively, and these are a few of them. Let's go beyond the 800 puts, see what else was lighting up the tape out here. Once you get beyond that, 860 calls, again, going out next week, nearly 10,000, 9,000 and change were the big actor after that, with the big trade coming on Tuesday, 3,600 and about 2,500 on Wednesday, nearly 3,000 today. Slightly biased towards the opening, so 860s looks like a lot of back and forth. Again, not surprising as we've raced toward that strike with only a week to go. Kind of interesting to see a lot of near-dated paper going up in the ags, which usually has a little bit more of a longer-term cycle to it, going around the new crop, old crop rotation. But interesting stuff afoot. Let's scan really quickly to see if we can see any other funky surprises lurking out here in the soybeans. Don't see a ton of them. Let me get back here to the quick report so we could do our old mover and shaker update our report. If you guys want to follow along with that, again, go back to the quick reports tab, kick the scanner, set the date settings for this week. And you can do exactly what we're doing right now. Again, this is purely based on underlying. What is moving, rocking, and rolling over there at CME this week? No OI change, no vol, nothing like that. Just straight up underlying futures movement. Let's go from the bottom to the top. Number 5 on the bottom there, the worst. I should say number 1 really on the worst mover, worst loser of the week is lumber, off nearly 9%, followed by we got platinum right behind it, off 2%. Then we've got the pound USD off about 1.75%, and silver, our old friend silver, 1.6%, and then rounding out the top 5 to the bottom there, we've got the Aussie dollar USD off nearly 1.5%. So a little bit FX in there. Maybe we'll take some FX. I haven't had a lot of inquiries about FX from you guys lately. Hasn't been a lot going on in FX, so we haven't rotated onto the program in a little bit. But let us know if you have any inkling in FX, and maybe we can accommodate you guys. All right, let's start now. The bottom, number 5 of the top 5 there in terms of upside here. We've got soybean meal up 4.5%, and that's number 5. Number 4, oats up 5%. Then we got KC wheat. Man, it's all ags all the time. Good thing we checked in on some ags. Up 5.33%. Numero dos here, corn up 7.5%. And wheat's number 1, nearly 9% to the upside. So nearly 9% to the upside for wheat, nearly 9% to the downside for lumber. Hopefully we'll get more upside than downside as we keep on rolling into your questions. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, welcome to your feedback. You guys have a bunch of it. Everyone wants to get me to opine on Game of Thrones. I'll just do it quickly, I guess, from BOTB. I'll pick this one from BOTB, maybe BOTB. Wants to know, what do you think of Game of Thrones this season? Are you feeling the hate like everyone else? No, I think that's safe to say. I'm not. I think I'm in the middle. Maybe I'm not super loving it, but I'm not awash. People out there are posting petitions to redo the season. That makes any sense. And no, I'm not in that camp. I think you can label any criticism at it. It's that it clearly was rushed. They had to put a lot into 6 episodes. And so things are going to get left by the wayside or maybe not given the attention they deserve. And that's certainly a fair criticism. Some of the other criticisms we're seeing are going a lot beyond it into other areas, other realms that have nothing to do with the actual quality of the material itself. And I'm not going down that road. But in general, it's all right. I'm enjoying it. But maybe, they could have done with a few more episodes, I think, to give the characters the send-off they deserve. All right. Doser? Dose-R? Let's go with Doser. Sounds fun. Doser wants to know, how tasty is that CME Bacon? Yeah, in terms of announcements, this one seems to have caught your imagination. Everyone's liking it, retweeting it, sending it to us. You see this? Yeah, we saw it. If you missed it, listeners, we'll catch you up. CME announced a new fresh bacon index recently to, as they term it, track supply and demand dynamics of bacon transacted on the cash market. We've always talked about our hashtag hog love here on the show. I guess we'll have to add hashtag bacon love, because really, who the heck doesn't love bacon? Now, it's worth noting, if you dig into this a little bit, it is not a tradable product in and of itself, at least not yet. Usually when they launch these indices, it's kind of a bit of a test, a feeler, and if there's interest, if people really like it, maybe they will launch probably a future first, and then who knows, an option on bacon? That'd be pretty cool. But let's see here. This is coming May 13th, so it already launched. Tracking the price of fresh bellies used to produce bacon. So that's kind of what the origins are. They call it the Fresh Bacon Index. It calculates the price of one load, so 40,000 pounds worth, if you guys are not familiar with the contract specs out there, of fresh bellies in cents per pound. Let's see. It's a weekly weighted average of the prices for fresh bellies in the weight categories of 7 to 9, 9 to 13, 13 to 17, and 17 to 19 pounds. So that's what it is. If you want to get yourself a taste of that tasty, tasty bacon, it's actually live now. You can keep an eye on it and track it for yourselves. It's a product that clearly has a lot of resonance for people, just the hogs in general. People hit us up about it, and we joke about it with our hashtags, but there is some interest. It's one of the more esoteric product categories, and you guys seem fascinated by it. And certainly the bacon index is not going to hurt that fascination. I tip my cap to the CME social folks. Seemed like they had some fun with this one out there. How can you not? It's a bacon index. All right, then. These handles are mouthfuls this week. Danan Ace. Let's go with Danan Ace. One syllable too many in there, maybe. Danan Ace wants to know, what's the difference between realized and historical volatility? Short answer, nothing. Long answer, nothing. Realized is, of course, the amount of volatility that the marketplace has actually exhibited over some period of time, and historical, the two terms are or you can substitute them one for the other. You can look at a chart of the volatility over a certain historical period. That is historical volatility. It's also what the market has realized over that time. So the two terms can be used interchangeably. So short answer, nothing. So feel free, don't get confused if you see realized or historical quoted interchangeably. They're the same thing. All right, what we got here? Tank, that's an easy one. Tank wants to know, people have this one on the brain too lately. Will we see ETH futures anytime soon? Also, how are the ag options shaping up here? Well, we just did the latter, at least for the beans. So hopefully that satiates you there, Mr. Tank. I guess we could do a lot of the show here on some other ag products. You guys, okay, tell you what. Well, we just did the beans. Let's do real quick. We'll do one more hit because the ags are lighting it up. And you guys do seem to like yourself some ags out here as well. And we don't get a chance talking that much. We'll do a quick hit. Let's pick another one out there. Let's just do corn really quickly. All right, so let's go out here. Again, same deal, listeners. Go to the drop down. Go to agriculture, which is right at the top there. Grains and oilseeds, you'll see it there. And then corn, right at the top of that list. Click on that. And bam, you're off to the races. If you want to be a crazy person like me, you hit select all. And then you're good to go out there. Corn coming in, 379.75, so almost 378. Also, like I said before, moving and shaking this week, up nearly 8% or 28 handles. So we're looking at around that 380 strike for the at the money. Where was the action this week? This is another reason why you got to have the select all open. There's decent paper out as far as decent indice, pun intended, but a little bit closer to home is where the number one print appears to be congregated here. It was in July, the July 400. So yet again, even money paper aggregating around that even money strike here. Nearly 40,000 contracts going up, pretty even, except for Monday. Light on Monday, 1,200 contracts, then 10x that the rest of the week. 12,000 on, almost 13,000 on Tuesday. 12,000 and change on Wednesday. 12,000 and change today. So it was a fairly active, even amounts of contracts printing on this even money strike throughout the week. A total of nearly 40,000 contracts. Interestingly enough, only about 1,400 of that opening. So a lot of back and forth churning on that strike. Looks like 380s are active too. Those are at the monies on Tuesday. So maybe a vertical going up, 380, 400 on Tuesday. Similar volume both days, right around exactly 13,000 contracts. And then actually the 380s will be our number two for the week with about 34,000 going up of those. Again, at the money calls now, so not surprising those would be leading the dance. Those are a little bit more biased towards the opening, about 4,000 open. But again, a lot of churn and burn on that strike. 13,000 was a big day on Tuesday, about 5,000 on Monday, 8,000 each yesterday and today. Let's see, then we drop off a little bit and we go out to the 380s. Also in, these are in June with doing about 26,000 of those. These are going away sooner. These are a little bit more than a week, about 8 days left of these bad boys here. Let's see how the vol, like we mentioned, the vol is up. You're going to have a close to 30 handle move. You're going to have some vol, and that's exactly what we saw here. Up strong, up size, up near portion of the curve, all that gamma, up multiple handles. But even pretty much farther out, you're getting out to July and beyond, where I would assume some cooler heads are prevailing. Still up nearly 5 handles in July from a vol perspective. So a big move out there. Let's look at July as well, because that's also where our most active contract was. Let's look at the July skew. See how it changed a bit this week. The puts are, looks like a little bit cheaper. They're about nearly 9% cheap versus 6.6% last week. So a little bit of air coming out of the puts there. And the calls also coming in a little bit, which is interesting. They were nearly 10% rich to the at the money, now 6%, about 5.7%. So that they came off about 4 points, and the puts came in about 2 points. That's kind of interesting. Usually you see the vol going up. You don't see the air getting taken out of the wings that aggressively. I'm guessing, looks like the wings must have had a lot of juice in them. We were waiting, I guess, for this trade war. People were pricing in both the calls and the puts pretty aggressively. And now that we saw this, maybe some of the trade war stuff progressing, looks like some of the air being taken out of the farther wings of the skew curve here. That's interesting. Usually you see a big move to the upside of this. You see some developments like we saw in some of the other products. You see the calls come in. You see the puts get bid. We didn't really see that. We saw both of them coming in, which is interesting. Interesting stuff out here. So there you go. Who was that? Tank We could probably talk ags for many hours. But there you go. You got 2 ags on the show today. So hopefully that pleases you guys out there in the land known as, let's just call you the Twifo Legion. There it is. There it is. There's my music. All right, listeners, kind of bringing it to a close here. We sometimes aim for around 40-odd minutes, 45 on this show. Sometimes we go an hour when things are just hot and heavy out here. But we've got to keep on rolling with the network and indeed a lot of other things going on here. Kicking the can. And I've been talking for a lot of the day already, listeners. So I got to keep what's left of my throat alive. Hope you guys have been enjoying the slew of content. If you've listened to the network at all recently, you know I've been talking a lot lately. Dozens upon dozens of interviews and conversations hitting the network on top of all the exclusive panel audio from the SWAN conference, from OIC. Got great audio coming at you from the Trading Show Chicago. So you guys can't hit the conferences, don't worry. We're doing it for you. So hope you guys are enjoying that as well. And since they can't come here and do it themselves, I'll do it for them. Make sure if you haven't done so already, quickstrike.net, QUIKSTRIKE.net is the place to go. Kick the tires and light the fires over there for Nick and his crew on Quick Strike. Seriously, if you're trading this stuff, if you like this stuff, if you even have a passing interest in this stuff, and you're listening to this show, you should, then you got to be using this platform. At least try the free version, cmegroup.com/Twifo, and then upgrade from there once you get a use case in for how you're going to trade these products. And of course, ease off hither and yon. Make sure you check out what's going on from FTSE Russell. A lot of great data. In fact, I don't think I even had a chance to get to it here on this show today for what's going on with the Russell. And you know what? We'll get to that next week about how the Russell is performing versus a variety of the other indices. I mentioned it today. The big movement's going on out there. So Russell 2000, small caps performing interestingly in this largely macro-driven environment. We'll get to all of that in a little bit. FTSE Russell, FTSERussell.com is the place to go. Give them a follow on Twitter while you're at it as well, at FTSE Russell. And of course, CME, you know how to find them. Great research coming out. Eric and his team and Blue over there really doing a lot of great. Eric had a great one on equity skews recently, so we'll have to get him onto the show to discuss that. What surprises or perhaps lack thereof lurks out there in the skew in these equity products. Fascinating stuff. If you're trading this stuff, you listen to a show like this, you like stuff a little bit of skew, check that one out, CMEGroup.com. They usually put Eric and Blue stuff front and center on the homepage. It makes it easy to find. Of course, you click around, you can find this podcast there as well. So if you're listening to it there, welcome. We love you guys. And on behalf of myself and Nick and Sean and our friends at CME, I want to thank all of you out there for downloading, streaming, subscribing, for sending in questions, for listening live, for all the fun stuff that you do, for asking me about Game of Thrones, everything else you got on the brain. We love you all, and we'll see you back here next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.